Hey guys, this is CN Honor on the screen, and today I bring to you a VIP strategy that I call dollar printer VIP strategy. Actually, this strategy is not supposed to be public, but because I promised it, and all you need to do is to not skip any part of this video. Just stick with me and follow the conditions, the teachings, the learning. That is what will make you profitable using this strategy, right? I've actually made some profit with this strategy, this morning, and please, some of you are interested in knowing equity or seeing account balance. I really wonder how that affects your learning. Okay, we've actually made profit, but then let me see. I don't know how it affects your learning, but just stick to whatever I will say in this video. And the profit made today is not only based on the strategy anyway, because of course I combine a lot of things, but then this is the account, okay, and it just spiked. I took this trade based on the signal given on to me by M5. The signal was given, the condition was met on M5, and the condition just met on M15 now before this spike, and I'm looking at an alignment that the condition will be met on M30, okay, and possibly H1, which is why I'm going to give you the conditions for you to trade with this strategy. And if you stick to it, you can trade with it almost all day long, and then you have little or no losses. Okay, now I'll give you the setting right away, and then I will then give you the conditions. Let's click on the F icon, and actually the main strategy is don't mind the spike. Okay, I don't mind the spike. Okay, of course I would have taken my profits already, but because I want to do this video, and of course it's partial profit that I've taken, and it's a trade that I hope to be on for a long time. I hope to be on this trade for a long time because of what I'm seeing on H4, okay, and then of course D1, and just as you can see, this trend line that I put, that's not the strategy. I'm just showing you the trade. Okay, the strategy is this that I want to show you now, but let me give you the setting. Okay, like I said, the main strategy is on the indicator window 1, but this main chart, the moving averages on this main chart, I'm going to tell you how you are going to use it in combination with the strategy so that you will make huge profit. Okay, actually the 2 moving averages on the main chart is another strategy entirely, which is different, completely different, but because you are a special person to me, that's why I decided to also incorporate it into this very strategy for more profitability. Okay, now this is more or less like a custom strategy. Of course, I'm the only one using it, but because of my promise, I decided to incorporate the 2 moving averages and the different explanation I'm going to give to it. I decided to incorporate it to the main strategy that I'm giving to you. Okay, so let's quickly go to the setting. Of course, normally I use fractals on my chart, okay, in case I want to trade on higher time frame. This is the parameter of the fractals. Then you click down, then the first moving average is of course the moving average period 200. The shift is 0, method is exponential. You apply it to close. The styles is 3 pixels. Color is this green color, but you can use any color of your choice that will suit you best. Okay, then the second moving average is moving average period 50, then exponential again. You apply it to close. The style is 3 pixels. Color is this orange or gold, if you choose to call it so. Then you click done. Then the main strategy now, indicator window 1, you have the envelope. This is the setting of the envelope. Okay, you can take a screenshot. Or the period is 14, shift is 0, deviation is 0.100, method is simple, apply to close. Upper band is 3 pixels, color is blue. Please take note of this band. Then lower band is 3 pixels, color is also blue. I mean a red, color is red for the lower band. Then the level doesn't really matter, but just put the levels 12 and 88, okay? Then the style is 4 pixel, color is gray. It doesn't really matter, but just put it. Then alligator, oh god, this is the setting. Take absolute attention, give absolute attention to this now, this and the envelope, because these are the strategies. These two indicators are the main strategies. Now the alligator, this is the jaw period is 8. In fact, everything is 8 down. Everything is 8 down. Then the method is smoothed. You apply it to median price in bracket HL/2. Then the styles is jaw styles 3 pixels blue. Make it this way, please. Then teeth style 3 pixels. Color is this pink. Then lip style is 4 pixels, and then the color is black. Make it exactly like this, okay? Then you click done. Then the relative strength index, which will give you the levels, these are the parameters. Period, we don't want to see the period. You make it 1. Period is 1. You apply it to close. The styles is 1 pixel. Color is blue, okay? We don't want to see it also, but the levels, very important if you are going to use it, okay? 8, 92, 87, 13, 50. Then the styles is 4 pixels. Color is this light green you're seeing. Then you click done, okay? You click done. And let's get back to the chart right now. So how do you trade with this strategy? First and foremost, this is the chart. This is the chart position. This dollar sign, okay? This dollar sign normally, or here, okay? This is where you're going to place your chart position. I don't know if you can see it, okay? Here, sorry. Let me quickly bring my brush. Here that you're seeing, or here, is okay for the chart position, okay? That's one. Then secondly, this is the zoom level we are using, okay? This, you zoom out completely, then you zoom in once. This is the zoom level for this strategy, okay? With that being said, let me now give you the condition. Now the alligator is a kind of leading indicator, especially in this strategy now, with the setting and the manipulations that I did and the testing, is leading. Now let me long press the chart so that you see what I mean. Now you discover that this is the current chart position, and then the candlestick opens at that end. Now trace it down. You discover that all this, the envelope, they are in alignment with the current chart position. But look at the alligator. The alligator is this black, is ahead of the other ones, okay, with about 3 to 5 candles, okay? Now how do you trade with this strategy? Now on boom markets, and please I advise you to use this strategy on boom 1000 and crash 1000. Of course it works on boom 500 and crash 500. It also works on other pairs like volatilities and step index, but please I encourage you and advise you to use it on boom 1000 and boom crash 1000, okay? Now you look at this relative strength index level, okay, of this green line you are seeing up, and then the green lines here, okay? On bull market, you are looking at the upper band of the envelope. That is the blue line you are seeing, is the upper band of the envelope, okay? You are looking at a condition whenever it crosses the, of course, the alligator will first and foremost get to this level now, and then curve and be coming down. Why the upper band will now move and then also curve. Now as soon as it curve and it crosses it, and it crosses right inside this level, inside that level, remember it must be inside the level, it must be inside the level. Okay, let me show you the level again. Relative strength index. Okay, look at the level: 8, 92, 87, 1350. So for boom, you are looking at it crossing right inside between 92 and 87. This is 92 and 87. This is 92 and 87. Why this one is 13 and of course 13 and what again? Let's check so that we'll be sure of what we are saying. That the down one is 13 and 8. The down one is 13 and 8. Okay, while the up one is 92 and 87. 13 and 8, but that's going to be for crash. When I go to crash, I will explain it to you. But this one, the on boom, you are looking at the crossing to take place inside these levels, okay, which is right inside between 92 and 87. 92 and 87. Okay, as soon as it crosses, place your trade and then take your 10 candlesticks. Take your 10 candlesticks and you are out of the trade. And you are out of the trade. Now let's quickly backtest and see if it actually happened. Now it can still trend down and move down, but take 10 candlesticks and then exit the market. Now look at this place. Our chart position is here. Okay, now why is it important to take note of your chart position? Now see it. The current candlestick is here. So whenever the current candlestick is there and you want to look for your conditions to be met, you are looking at this as a correspondence. I'm taking my time to explain this to you because I want you to make huge profit from the financial markets, okay, as a patronizer of CN Grade Councils and Forex trade. So I'm making this specially for you. So I'm taking my time to explain this so that you make good money from it, okay? That is why you're going to be looking at this place as your correspondence. And if you choose this place to be the chart position, you should be looking at that place. So you'll be looking at that place whenever it spikes and then the market moved from the oversold to the overbought region. You are looking at the crossing right inside this place. For boom, whereby this blue curve, of course the alligator will get there first and curve, and then the blue, which is the upper band of the envelope, will now cross it. Please, the crossing has to be obvious. The crossing has to be obvious before you place your trade, just like this one now. Just take a look at it. This is our chart position. Look at it. This is our chart position. This is our chart position. Trace it down. Have you seen it? Okay. Now let's count. Let's count now. Look at it here. This was where the crossing took place. I even gave space, but even though I gave space so that I will be sure that the crossing is obvious. Now let's count. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Before this spike, okay? Now even though it spiked, normally the conditions doesn't meet if the market is in an uptrend. Look at it. The condition never met here because the market was in an uptrend. Okay, don't worry, I'm going to give you additional explanation and bonus. That is when the moving averages on the main chart will come into play. So, but then the crossing has to be obvious, and as soon as it's obvious, take your trade. Now this is sorry about that. This is we're returning back to profit. This is one. We took our trade and then look at it again. The condition was also met here. Look at it. You would have taken your 10 candlesticks and then you're out of the game. Look at it. Look at where it was made. You have taken before this. Okay, even if you had wanted to take 20 candles. Now, look at this. Look at this place. Look at this place. Look at this place. Okay. Now, Let's count. You remember that boom is on a very serious uptrend, and the conditions are still met, and then you are still, look at it, if you count from here, it's over 10 candlesticks before this spike. Let's count. The condition was met here. Let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. And even though the market still went down. Now, every now and then, even though, look at this place, you would have taken 10 candlesticks down. Now, even though the market was on a very serious uptrend, now the condition was actually met here. It was met here. Look at it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, please look at it here. This is just for today, 19th of, it was met here. Okay, now how many conditions met, even though this market was on a very serious uptrend? Okay, now that is for boom. Now let's go to crash. Oh my God. Now look at it. For crash, you are looking at the crossing to be between the lower band of the envelope and the alligator. Look at it here. The lower band is the red one. Okay, so when you go to crash, you are looking at the crossing between the red and the black. Okay, if you choose to call it that way. But remember that the green line is the lower band of the envelope, while the black is the alligator, and then the blue line is the upper band of the envelope. Now the condition was met here. Look at, we have taken 10 candlesticks before this spike. Okay, now this one, the condition did not actually meet on or with this zoom level, but if you zoom in this way, it may be met, but we are using this zoom level, so the condition was not met. This one was met. Okay, would have taken your 10 candlestick and you're out of the market. Now look at here, would have taken 10 candlesticks. Let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, and still counting. Okay, so that's just it. Let's keep back testing. Now look at here. I'm going to tell you another secret that will make you to make the market with this strategy. Okay, you see the conditions met. And then we take our trade, and then we take our 10 candlesticks, and we're out of the market. Okay, now look at it here also. Condition met here, would have taken 10 candlesticks. All right, so having shown you the settings and then the conditions, let me now give you the secret I promised you. Now, the moving average, 2 moving averages on the main chart. Now, whenever you want to trade or scalp with this strategy on M1, to be on the safe side, okay, if you want to trade without losses with this strategy, go to your M15 and your M5. Starting from M5. Okay, starting from M5. Anytime price, of course by price I mean this candlesticks market, is below the moving average period 50, okay, you are more comfortable to trade with that strategy, taking your 10 candlesticks on M1. And anytime the price is below both the moving average period 50 and the moving average period 200, oh, that is the best time that you can take it seamlessly without fear of anything. I don't know if you understand. If the market is below both of them, that is the best time. But if the market is below only the 50, it's also a good time to trade. And if you understand trend very well and add other price action knowledge, even when the market is above the 2, you can still trade, which is the condition that we are into right now. And of course, now let me put my rectangle on this place, and let's go to M1 to see what happened there. Let's go to M1. Now you discover that the places I just showed you are under this place where the market is on a very serious bullish move. Yet the conditions met, and then we took our trade safely. Hope you can see that. And if you go to the M5, you discover that price is actually above the 2 moving averages, which is not so safe for us to trade. But then we still take the trade and made a profit, okay, with it. That is to tell you that if it is under, if price is under both, oh my God, you would trade with the strategy, closing your eyes, okay, like from here now, like from here, okay, from here, you discover that price is below them. From there down, okay, is below. Under this condition, okay, from here is below. You see the moving averages, price is below them. Under this, whenever, any day, any week you see it, you trade without fear of anything, okay? But if it's above it, like it is from here now, okay, you trade it with caution. If you can stay away, fine. If you cannot stay away, you trade it with caution, combining other knowledge of price action, okay? That's for that. And then, like I said, that's a different strategy, but I just incorporated it now. And then you can look for an alignment. Now you can look for the conditions to be met on higher time frame. This is M5 now. For instance, the condition was met here. The condition was met here on M5. Now you see, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Oh my God! You can see take between 5 to 10 candlesticks on M5, which is around 50 candlesticks if the conditions are properly made, just like this one now. Then on M15, if the condition is met, I advise you to look for the condition to be met on M1 and M5. Okay, you can forget about M15, but if you have the equity to hold, okay, you can also take signal from M15. So that's just the strategy. Take your time to watch it, of course. Watch it over and understand it, and then like I said, you practice it on your demo, okay, and then for at least between 1 to 3 days, and then you master it and know how it works, and then you start trading with it on your real life account, okay? And the same is the case for crash market. For crash market, whenever you check your 5 minutes and 15 minutes and price is above, of course the opposite is the case, price is above the 2 moving averages or one of them, then you have a better condition to scalp and trade with it conveniently on 1 hour, on 1 minute time frame, okay? But like I said, if you understand what the market is doing and how trends and market structure work, even if the market is on a downtrend, you can still trade. Like, look at, for instance, this one now that just met, okay? You discover that on M5, price is below the 2 moving average, but the condition met on M1, and we also took it, okay, because of how profitable the strategy is, okay? So that's just it. Take your time, watch it over and over again, and let's see how it works, okay? So that's it. Many times for watching this video, and please don't forget to subscribe to this channel. Turn on your notification bell. Just hit that subscribe button if you are new on this channel. Turn on your notification bell so that whenever I upload a new video, you get notified. Also, leave your decent comments in the comment section of this video, and share this video with other traders so that we'll reach out to more audience, okay? Like it, and then see you in great cancels. We'll talk to you in my next video. Bye.